Good morning, good afternoon, good evening, wherever you're joining us from. Thanks so much for joining Ben and I today. A couple quick ground rules or a little bit of background as we get started. Please use the LinkedIn question function to ask your questions. We'll make sure we leave some time at the end to answer them. We're going to aim for about 30 minutes. Perhaps we can even be a little bit shorter going through the key information, and then there's going to be time for questions, but we plan on giving you some time back today. This is being broadcast live and it is being recorded. You'll be able to return and see the recording on LinkedIn, and contact details for Ben and I will be available at the end. We'd welcome you to reach out, including email or scheduling a meeting, whatever works best for you. So let's get started. Ben, I think probably the best place is for you to just introduce yourself because you bring such deep insight and experience to this. So why don't you kick us off by introducing yourself, please?
Yeah, of course, Ed. And thanks for inviting me to do this. It's going to be fun. So I am the CEO of Objective Management Group. Before I'll get to OMG in a second, but before I became the CEO of Objective Management Group, I spent about 15 years working in finance in a number of roles, both on the public market side and also in institutional and consumer lending. And then in 2021, I raised a fund partnering with several family offices as well as some mid-market private equity firms as my LPs, with a thesis around acquiring a company that had unique data assets. And we acquired Objective Management Group in 2022, and I've been running it as the CEO ever since.
Good. And I'm Ed Marsh. I have run businesses, and I've been in industrial sales since probably longer than I want to admit, about 1992. Now I consult with B2B companies on revenue growth as the founder of Ed Marsh Consulting. I also have a Private Directors Association certificate in private equity portfolio company governance, and I deal with the day in and day out issues through my clients that are often portfolio companies that are struggling to achieve the revenue growth that they've built their models around. I've got a lot of experience across industrials and tech and lots of global experience. Graduated Johns Hopkins University, former Ranger qualified airborne infantry officer, and I'm located in the Boston area, actually not far from where Ben is. And I'll say I've been really excited about this conversation since Ben and I started massaging some of these ideas back in February. He brings an incredible educational pedigree, which you didn't go into, but you can certainly read about on his LinkedIn profile, and deep sponsor insight, and obviously now operator insight, whereas I deal kind of every day with the reality at the operating level. So that's the background that I think that's going to give a lot of important context for the conversation that we're going to have. Let's start with kind of context. I mean, business is hard. Rates are up. There's lots of money chasing fewer deals. Prices are up. Zorian Rotenberg of Charles Bank Capital Partners, I'd say he's a must follow on LinkedIn if you're in this space. He's always posting stuff that highlights how private equity is evolving. And lately, he's had a number of posts that illustrate how the private equity model is changing. And I think the essence of it, there's a lot of really interesting information, but this graphic captures the essence of it, that realizing value on exit is increasingly about actually growing revenue and margin. It's not enough to just identify and implement operational efficiencies or do some balance sheet engineering, but you have to grow. That means new logos, account expansion, margin expansion. And so that's the important place where we're starting. We have to have clarity into how a deal is going to create value and the various check valves kind of in place to understand the barriers so that we can quantify them, we can plan around them, we can rectify them. And fundamentally, if we agree that revenue growth is an important piece of the value that we hope to get out of a transaction at the end, that means that we have to have understanding of the sales team and their ability. Can they execute on the investment thesis from day one? Or what changes and investments, and most importantly, what time is going to be required in order to help them prepare to do that? What limitations might impair this? Is there, kind of on the simple end, an effective CRM? Is there a properly engineered sales process? Is that process reflected in the CRM? Are marketing and sales aligned? Do sales managers have an appropriate span of control, and do they coach correctly? What's turnover like? Are reps performing? I mean, research shows that sales turns over. Some of OMG's recent research specifically shows that sales reps turn over at nearly 3 times the rate of other employees in the first year. We also know that more than 40% of reps consistently miss quota, and up to 40% of deals end in no decision. Often there's no process for explicitly and deliberately hiring second and third standard deviation talent. And an operating executive from a similar company who was successful in a different market environment won't necessarily be successful leading a sales team in your company, in your market, in today's situation. So let's dig deeper into each of those. And probably the place to start is, Ben, if you can take us through one of the really interesting applications, and that's due diligence.
Yeah, of course. And Ed, I've got to give you all the credit for this idea or for this framework, which is, most financial buyers, I hope, are familiar with quality of earnings, right? Where the goal is, very simply put, is you want to make sure that you're proving out EBITDA as the seller's representing it, and that cash is what the seller represents, right? It's a core part of any acquisition, whether you're doing it in the kind of micro private equity space or all the way up to large enterprise deals. And what you brought up, Ed, is what's really missed in diligence, or where there's not enough focus, is what is quality of my revenue generating machine, right? We talk a lot about quality of revenue. Is it repeating? Am I expanding logos, gross retention versus net retention, LTV versus CAC? We understand all of that as financial buyers intimately. But what we don't understand is what comes one step before, which is how is a dollar actually generated and brought into the company? And what I mean by that is, how good is the team that we have who's responsible for selling today? What are the roles that they are responsible for? Is there actual formal leadership in place? And a lot of organized sales is quite unique in that very often you have an individual contributor who excels at their job and gets promoted into a managerial role, which is a very different, being a sales manager is a very different set of competencies than being an individual contributor. And they're really not given any training around how to be an effective frontline manager. So you want to understand all of that. Why? Why does it matter? It matters because in your acquisition, if there's any component that's value creation based, and in most acquisitions, there's at least, even in the most distressed scenarios, there's at least a little bit, is you have an assumption implicit assumption that you can build a reliable and repeatable sales machine, that you can take what your top performer is doing and you can either train the rest of the team to perform in the same way, or you can identify and hire additional top performers. So you want to make sure that you understand before before you buy the asset. You want to make sure that you understand what is the quality, what's the machine that I'm getting. Am I getting a machine that's already running and fully optimized? Am I getting a machine where there are going to be parts that need to be replaced? Or am I getting just a complete teardown where I'm going to have to rebuild this entire thing myself? And I think very often that gets overlooked, and financial buyers end up in the second or the third scenario, and they get to the board meeting 2-3 quarters in acquisition when they're missing plan, and it becomes a very uncomfortable conversation for everybody that's sitting around the table.
So a framework then, or a set of tools to help us not make those assumptions. We all know what they say about assumptions, but to actually dig in with data and empirically understand what you're getting and whether that machine exists and what you're going to have to do to modify it or to improve it.
Yeah, absolutely right. And wouldn't it be great if we knew this ahead of time? One, so that we can take it into account as we're preparing IOIs and LOIs, so that the price, the valuation reflects the incremental investment or uncertainty around the quality of the machine that's gonna be we're gonna need to build.
And I guess that also means, although it's not the subject of today's conversation, but if you've got a business that you're thinking about selling, then here's a way that you could actually make a stronger case for your valuation. You could be more comfortable with your earnout. You could help prepare to sell by proactively bringing this information, this insight, and a lot of the work that results from it to the buyer ahead of time.
That's a really great point, Ed. Hey, I mean, look, everyone loves a recurring revenue business, a subscription model business, and we know why. The reality is, picking up those nickels on the street isn't so easy. The next best, I mean, I wish it was. The next
Right.
best thing is for you to be able to say, look, my business doesn't have a recurring revenue pricing model, but it has a reliable and very consistent sales team that is going to be able to generate revenue in any economic environment.
All right, so that takes us to our next slide and kind of the essence of this, that you ought to be able to make informed decisions based on your investment thesis. Are you going to be able to realize that? How long is it going to take? Does it fit within your timeline? Take us through some of these details.
Yeah, and I love this chart that you got from Zorian. You're right. His thinking around this is brilliant. Look, value creation, right? Just at the end of the day, it boils down to, we're going to increase EBITDA by growing the top line, right? As opposed to, by driving down OpEx. And if you're focused on increasing the top line materially, that's going to come from, as you mentioned at the beginning of this, net new logos. It's going to come from expansion of your existing logos, or that's going to come from price increases. Now, regardless of which one of those three or what combination of those three you're relying on, you are going to rely on your sales team or some kind of revenue generating team to drive that activity. And what you need to make sure of is that the people who you're counting on to drive that activity, there are only three things to do, right? You need to make sure that they can actually do it. So for example, let's take net new, right? Can the sales team actually acquire net new? What we see, very unfortunately too often at OMG is sellers or sales teams that are responsible for driving net new, whether they're called net new or BDRs or business developments or account executives, whatever it is. Unfortunately, too often they are really inbound, what we call kind of order taking teams that are disguised as new logos.
Right.
So what I mean by order taking is, hey, if someone lands on the website or fills out a form or clicks on something on LinkedIn, yeah, they'll pick up the phone and call them. But if there isn't inbound interest for the company already, there's absolutely no way that they're going to go out and generate business on their own. In fact, some analysis that we're going to be releasing later this summer shows that when we analyze just the net new teams that are focused on net new growth, new logos, we found that only 26% of them were actually proficient in our hunting sales competency.
Wow.
Only 26%. What does that mean? Only 26% of new logo teams are actually prospecting consistently and appropriately for opportunities, as opposed to just waiting to be fed by marketing.
Wow.
So if you've got one of those teams, if you've got one of the 75% as opposed to the 26%, and you're relying on, new logo growth, what does that mean for your investment thesis?
Yeah, absolutely. I mean, I think the presumption is that sales has gotten a company to the point that it's ready to sell, and so it's going to be okay going forward. But if you don't dig down into those atomic level aspects and attributes of each person, of the team individually and in aggregate, then you miss a lot of that critical information.
You absolutely do. You absolutely do.
All right,
And
so
look,
sorry, go
go
ahead.
ahead. I was just going to say, look at raising prices, right? We know a lot of buyers, when they acquire a company, they like the asset because they think that there's an opportunity to raise prices. But what they don't ask themselves is, what's the behavior of the salesperson when it actually comes time to deliver that price increase to the client or to the prospect? Are they able to deliver it and hold the line? Are they able to sell value, meaning that they get to capture the price increase? Or are they not selling value and they lose to competition? Or even worse, are they not selling value and they end up discounting? And instead of having a margin expansion strategy, next thing you know, you're in a board meeting wondering why your gross margins are coming down.
Right. And you've got, I mean, it's interesting. You raise actually two separate points. Can the salespeople have the tough conversations and deliver the news, or do they hide behind email or some sort of a letter or something like that? But then do they have the sales ability to make it stick? And those are two different things, and both important attributes that we're going to talk about some of the science behind how we look at this, but both are questions that your tools can answer.
Absolutely right. Yeah.
All right. So you took us through the important use case of due diligence, and that's important. I mean, you want to know in advance what you're really buying. Can you move the thesis faster? As I mentioned, I often see it in the case of portfolio companies that are slow out of the blocks, and they get 7 years, they're 3 years into it, and they're realizing the sales team can't do what they need to, and now they're in a jam. What do they want to do? But that's two different use cases. The first is due diligence in advance. The second is when you're in a deal with a portfolio company and it's just not quite clicking. The common revenue growth frustrations are listed here. I don't need them. I don't need to read them, rather. You probably feel them in your gut. You probably experience these, see the symptoms. You know how they kind of cascade on top of each other. Just when you think you've worked your way through one of them, another one pops up. So let's assume that you've got appropriate product market fit, that you've got decent product, that you've got appropriate pricing. Then at some point, we have to stop blaming the market. We have to stop saying, well, the competitors undercut us. We have to stop saying, well, buyers don't know what they're talking about. We have to figure out how to optimize a sales team to move past the excuses and get the job done. And that means that we have to be able to do kind of an analog for the due diligence, but we have to do it on a current portfolio company. And that's tricky because it's a multi-variable environment. I mean, it's easy to see the symptoms, but there's so many moving pieces, and to get to the root cause is really, really tricky. But we know if we treat the symptom, often all we do is reduce the pain a little bit. We don't fix it. So if we want to fix it, we have to get to the root cause. And that means that in order to get a portfolio company moving when it's going slower than we anticipated, to dig into those root causes, we have to look at the people, we have to look at the managers, we have to look at the training and coaching, we have to look at the systems and processes. And what you see here, this simple graphic, is an example of one of, I think, the most important insights that we provide, and that is where sales managers spend their time. The sales manager role, you mentioned earlier, the unfortunate circumstance where a top rep gets turned into a sales manager without the training, takes their production off the street, puts somebody in a manager role that may not be well suited for it, certainly hasn't been trained for it. That sales manager role is critical in order to keep the reps on track, to optimize performance, to keep people aligned with sales process, and to drive the results. And this is a great look at what the kind of information, the kind of insights that we can provide for a company trying to understand what's going on with their sales manager. There's another use case, though. So we've got due diligence. We've got an existing company that may be struggling a little bit, but we've got a third use case, and that is adding and replacing talent to support the growth. Sales is getting tougher. Many folks with long and, illustrious careers are now struggling in today's current market environment. Some say the solution is to hire slow and fire fast. Okay, that may make sense, but who are you going to hire slow? You have to be able to identify who you want to hire. Recruiters, referrals, operating partners all have their own preferences. But I'd say let's kind of pause and let's understand what we're really trying to do. We're trying to hire salespeople who not only can sell and who may have sold in some similar company in the same industry or a different industry or whatever, but who actually will sell your product or service in today's market environment to your prospects, given all of the prevalent circumstances today. And we know, unfortunately, we kind of understand it instinctively. Often we don't quantify it, but we know that hiring weak sales talent carries massive direct and indirect costs. And the costs are higher the longer your sales cycle is, because it takes longer to recognize the fact that it's been a mistake and to put people on a PIP and make changes and hire somebody else and that kind of thing. The reality is that traditional approaches are generally ineffective. I think I mentioned earlier statistics, 40% of reps now consistently miss quota. And the difficult part is that hiring sales is different than hiring any other role that HR and management hire for. I mean, the reality is that salespeople are the only ones that are trained to try to kind of outwit your hiring system and to sell themselves, and to make the case for why they're going to be the perfect fit. Ben and my mutual friend, Andy Miller, has some great research that shows that resumes and traditional interviews are only 18% predictive of success. Personality and behavioral tests are just 20 and 22% predictive, respectively, and IQ tests only 51% predictive. So you need an engineered, efficient, and reliable process if the goal is to hire second and third standard deviation talent. And it needs to be based on predictively accurate empirical findings. What you see here is an example of a hiring dashboard. In other words, you're screening a potential candidate, and you want a simple understanding of their ability across a number of very specific attributes that Ben will talk about, their ability to actually go out, get those new logos, implement price increases, do the kinds of behaviors that are really important for you to realize the investment thesis that you have within the time frame that you have to do it. So 3 use cases. The first is improving due diligence. The second is identifying root causes of portfolio company underperformance. And the third is sourcing and hiring superb sales talent. That means reps, BDRs, managers, sales leaders, etc. So you're probably saying, okay, that's interesting, but how? And so good question. And I think Ben is going to give us a lot of the details. I mean, he's a data guy, but first, kind of let's talk at a high level. If we want to deliver these insights with high predictive accuracy, kind of independently verified accuracy, and we want to comply with all EEOC requirements, it's important that we understand the tools that we're using. I mean, if we've got a tool that is substantially more accurate than the 20 or 22% predictive accuracy of a personality or behavioral test, that sounds good, but how do we get there? How do we know that it is more predictive? So Ben, being the data guy that he is, let me hand this over to him and let him explain kind of the data and the science behind what we're talking about doing.
Yeah, my favorite topic. So the key difference for our assessment and what makes it so powerful and predictive is that it is a skills-based sales assessment. What does that mean? It means that we're asking the salesperson or the candidate situational questions that simulate what they'd actually do on the job, right? So if we go back to the prospecting, the selling value, discounting example earlier, we have a question in our assessment that actually asks, when my prospect or client asks for a discount, I will A, negotiate, B, refuse, C, pivot to a conversation about selling value, D, I'll just refuse to give it to them, or I'll just give it to them. And we ask the candidate, the salesperson, about 200 of these questions, and we summarize the results into 21 sales specific competencies. I'm not going to go through all 21 just in the interest of time, but you can think about them in three kind of big groups. The first group is what we call our tactical competencies. It's essentially what you would expect to see in a sales specific assessment. How proficient are you at hunting? How good are you at selling value? How effective are you at running a consultative sale? Things like that. We also ask or measure competencies related to the salesperson's belief system. And Ed, you touched on this a little bit earlier in terms of, is the salesperson effective at delivering bad news? Or are they so reluctant to be challenged or to be seen as the bearer of bad news by a prospect or someone they have a relationship with that they just won't do it, and they'll fold and give the prospect whatever they want,
Right.
which is not an effective way to be a good seller. And then the last thing we do is we measure what is your will to sell? What is your drive to be successful in sales? And we find that the drive is especially important because it is the enabler of change and of improvement in your belief system, and then ultimately of change and improvement in your tactical selling skills. So all three of these kind of tie together very closely.
And you provide those insights with quantitative and qualitative sorts of perspectives and feedback. I mean, even down to delivering data with kind of crosstabs and horizontal and vertical insights into individuals in the team.
Yeah, that's right. I mean, we break down, they can break down the competencies further into attributes. We've got sort of over 100 sales specific attributes. And for each individual evaluation, you're getting, around 400 or so data points that give you insights on strengths and gaps of this particular salesperson so that you can figure out exactly. And we also allow you to calibrate the assessment specific to your selling environment, your selling role, because someone who's selling HVAC services is going to look very different than someone who's selling, SaaS software.
Right.
So we allow you to calibrate to your environment. We benchmark you to companies that operate in a similar industry and with a similar selling environment. And we really allow you to kind of finely tune the development that you decide to provide to the sales team to help them grow.
All right, so that's the technical answer, the data answer. Now, I'd say there's also some social proof, or there's enough practical experience that kind of validates the concept. First of all, OMG's been doing this for 30 years. They've assessed nearly 3 million salespeople from 33,000 companies. They assess 75,000 salespeople per year. As Ben mentioned, the tools are calibrated specifically to the sales role, BDR, sales manager, sales leader, field sales, whatever the case may be, customer service. Often customer service is a sales role that's overlooked, but it's increasingly important in certain customer retention and upsell opportunities. It looks at the market, the sales cycle, the nature of the product, degree of competition, transaction size, all of those, the job role that somebody has to sell to, all of those kinds of factors. And the data in the case of candidate assessments not only helps to understand who's an ideal candidate or who's a top candidate for your company, but it also gives you a roadmap to make sure that the interview is most effective at kind of picking at some of the areas where there's probably concerns, but you might not necessarily identify them with a traditional interview. Um, it also then helps to map out onboarding. So when you bring a candidate in, the really important first 90, 120 days to inculcate them in the culture, get them on board with your process and methodology and all that kind of stuff. The assessment results will help map that out for you. So let's kind of recap. We're talking about 3 different scenarios. Ben, why don't you kind of take us through what the where you started for us?
Yeah, of course. I mean, I think the important thing here is, especially as value creation becomes a more important lever in buyouts, is making sure that you're diligencing, making sure that you're diligencing the sales machine. Run a quality of sales and understand who are the people who I'm going to be relying on, either for net new, for expansion, or for margin growth. And do they have the capabilities, and do they have the systems and processes and the management infrastructure in order to deliver on that? You see that both in our individual evaluations and then also in aggregate analyses that we provide for sales teams as well, where we can report on things like, how effective is this manager at actually coaching their sales team?
So the first use case is due diligence. You're considering a transaction. The second use case is you own a business. You want to make sure that you're ramping it up as quickly as possible, figure out the root causes, fix them, train around them, plan around them, hire around them, whatever you need to do to get things on track. And then the third use case is kind of a future use case, and that's sales candidate assessments. So that's for hiring new employees, for new sales leaders, new sales managers, new reps, BDRs, customer service, et cetera. You can also use it, of course, for internal candidates who you're considering promoting into a role. You want to give them an opportunity to compete for that role as well. The important thing is that from a candidate assessment perspective, you have to keep in mind that it's the first step in a process. In order to comply with regulations and maximize the efficiency, you have to use it at the very outset. And I mean, the good news is that it can provide a rationale sometimes for some tough decisions, particularly with internal candidates. As a bonus, it's really worthwhile to understand how the executive management team and the board view and understand sales as well. And so there's some tools that can be used to help to develop an understanding of how the board may fit together, what independent directors may bring to complement the operating partner on the board and some of the sponsor folks that are on the board as well. And that way, when you get ready to talk through some of these important topics about revenue growth, it's clear to everybody kind of the perspective that folks are bringing to it. Anything that you want to add on that, Ben?
I think you covered it really nicely, Ed.
Cool. All right, so let's go to some questions. And as I'm looking here, if you want to drop some in LinkedIn, feel free. I'm seeing a couple other questions. Let's see. So there's a couple of them around how the process works, what the mechanics of it are. And I would say the short answer is it's an online experience. Somebody goes online, it takes about 45 minutes. There's a little bit of setup to do with management and executives ahead of time to make sure that we're calibrating it the way we talked about. But basically, everyone spends 45 minutes online. Is that fair, Ben? Or you want to go any deeper on that?
No, I think you captured it well. 45 minutes, it's entirely online.
Okay.
And
So
all multiple choice.
yeah, an easy lift for people. It's not like you're asking somebody to lay down on the couch and spend a couple hours getting some kind of a deep exam. Here's one about the root cause analysis for portfolio companies. I'd say, kind of paraphrasing it, it's essentially asking how explicitly those problems are identified. And I would say that's a good question. And my answer is that they are, but you'll need some expert assistance in interpreting the data. I mean, there'll be qualitative and quantitative. There'll be some text-based information. There'll be spreadsheets with crosstabs and context. But let's take, for instance, Ben talked several times about the struggle of landing new accounts or new logos. And that's often due to a number of interrelated attributes or skills or skill deficiencies early in the prospecting and sales process. So it takes some expertise to understand the market environment, overlay these results, and identify the root causes. And then, of course, once the root cause is identified, it also takes expertise to translate that problem identification into an action plan for training and coaching. Is that fair, Ben? You get anything to add to that?
Yeah, I mean, I think this is definitely not something that is self-serve. There's a reason why we work with people who are experts like Ed, in because you also want to make sure that you're applying the data appropriately to your company and your unique selling environment. So bringing in a consultant's a great way to do that.
And I mentioned at the beginning, here's contact details for both Ben and I. There's also a link if you are intrigued by this, you want to kind of dig into it, then by all means go to www.scheduleed.com. You book the length of time you think we're going to need for the conversation. You can pick 15, 30, or 60 minutes, and I'll look forward to having that meeting. Here's another question on the kinds of assessments. So basically, I'd say it's asking if companies use personality tests to build functional teams, how does this fit in? Is this a replacement or is this a complement? Ben, why don't you take that? I mean, I think that's a question you probably hear a lot from HR folks.
Yeah, yeah, of course. I think of the assessment. Our assessment is very complementary to a personality or a behavioral test. It's a different kind of tool. Those are personality and behavioral tests are measuring essentially how well does this person get along with similar or different, personality types that are within the company. That's really important for you to understand. What it doesn't tell you is this person effective at selling? How are they going to respond when you get into an environment where they're challenged with discounting or where they have to go out and hunt for new business? Or if they are appropriately suited to be a frontline sales manager. So that's where you need our assessment, which is a sales specific assessment. So typically, the way that the guidance I'll give to the HR partners we work with is bring our assessment in at the top of the funnel, give it to, if you're using it for hiring, give it to all of your candidates. And then when you settled on, your top 2 or 3 candidates for the job, give them the personality assessment and see who's going to fit best into the team that you already have.
Yeah, good. It's a good kind of recap of, I think, a common sense approach to it. And speaking of that hiring process, uh, here's one that's, I think, let me try to again paraphrase it. So they're saying they use recruiters who already have some of their own tools. So the recruiters are saying, by the time you get this person, we're going to have tested them and we're going to know that they're a good fit. And so how does this fit in? And I guess the question that I would ask is, first of all, this is such a high stakes decision. Don't you want to make sure? But secondly, how well is that working for you? I mean, if every rep that you're hiring in that situation is hitting quota in 6 months and continuing to improve, then, maybe that's good enough. But experience tells me that's probably not the case. And if it's not, then let's back up. And I would say there's 2 pieces. First of all, we all believe in process. Process is an important part of improving efficiency. And so we need a process for attracting, recruiting, and hiring candidates. And that process needs to be refined and optimized and continuously improved. And typically that's not the case. Typically there's a ton of wasted time. There's a ton of wasted effort. There's a ton of wasted expense along the way. And further, maybe the short answer is that to get the most value from assessments and to comply with the EOC requirements, everyone ought to be screened. And so it should happen in the first step before you see resumes, before you see last names, before you see professional work experience. What you want to do is understand somebody's ability, whether they actually will show up and sell in your environment. Anything to add to that question about how it fits in if recruiters use other tools or how somebody has a process set up, Ben?
I think that was great, Ed.
Cool. All right. Well, this has been a pleasure. Thank you so much for your time, Ben, and for your insights. The contact details are there on the screen. We'd both love to hear from you. Again, if you think this is something that's intriguing to you, then by all means, jump in that link and schedule a meeting. And I look forward to chatting. With that, we'll wrap up, give you some time back. Thanks, everyone, very much for joining us today.